Hey yo, what's up everybody? Welcome back to My Life in Stacks, where we stack all the precious things in life: wealth, family, and God. Appreciate you guys tuning in. As you can tell by the title of this video, we're going to be looking at why I am not buying gold and silver at the moment. So just as a breakdown before we get into the charts, I want to let you guys know I love reading charts, whether it has to do with the stock market, whether it has to do with options, whether it has to do with different commodities, whatever it may be. I love reading the charts, looking at the different indicators, and telling whether or not it is a buy at the moment. And so for that reason, I use that to make a decision of whether or not I am purchasing gold and silver. And when I say purchasing gold and silver, I'm speaking about adding huge amounts to my stack. Now, sure, every now and again I'll add just a small amount just to keep stacking, but it's depending on how the chart's looking and the pricing and etc. It's going to be based off of what stage we're in. So just as a breakdown before we get onto the charts, like I said, there's 4 stages. There's stage 1, which is accumulation, stage 2, which is a breakout, stage 3, which is accumulation again, and stage 4, which is decline. And so in those 4 stages, you look at any chart that has to do with any kind of company, any kind of commodity, whatever it may be, and you will see that that stock is in one of those 4 stages. And like I said, I base my purchases off what stage we're in and if we're in a buy zone or not. And right now, gold and silver are not in a buy zone. They are looking to be forming a stage 3 accumulation. And sure, they might not have a decline. They might break out from that stage the stage 3 accumulation. And like I said, when we look at the charts, we'll go over all of that. Man, this buffalo run is so beautiful. This was my first gold purchase just a month ago. Well, it feels like a month ago. It's probably been a month and a half or something like that. But man, it's insane how fast the prices have changed. A month and a half ago, when I bought this gold was at $18.50 and some change, and I bought this for $19.50, or it might have been at $18.60 or $70, but whatever. I bought it for $19.50, and this is a beautiful coin, very low premium, and like I said, prices were much lower, and that was just a month ago. And I'll show you on the chart when I purchased that. Then you got your scummy little junk silver 40%er right here. All my 50%, all my 50-cent pieces are 40%. I need to I'm going to start doing some coin hunting and look for some 64 and pre 64 and before, and start adding some 90% to my stack, because I definitely want to get some 90% junk silver in my stack. Man, as you can tell, the milk spotting, which I'm going to try an eraser. I've heard that works. I'm going to try an eraser and see if that gets rid of it. If not, I'm stuck with it. And for that reason, I mute. Man, these Philharmonics, beautiful coin, and they're starting to get taken over as well. You hate to see it. You hate to see it. Look at that. Whatever. Life. Still an ounce of silver. So yeah, let's get on over to the chart and look at what stage we're in and why I'm not making any big purchases right now. All right, so here's the chart for gold. This website that I use, stockcharts.com. Not plugging it, just telling you which site I'm using. I don't get any kind of payment for you using it. So just to get into this pretty relatively quickly, like I was saying, there's 4 stages. Stage 1 breakout is right in here. So if you look right here, that's a stage 1, or sorry, stage 2 breakout. Sideways for 4 days is stage 1 accumulation. Stage 2 breakout is 5, 10 day moving averages crossing over the 20. This 20, the 20-day moving averages is green line. The 5 and 10 are this red and blue dotted lines. So when those cross over, that indicates a stage 2 breakout. So as you can see, after that stage 2 breakout, we go up, which is what happens on a stage 2 breakout. From that breakout, you can see it started to move sideways, and it had a nice little, up and down, but relatively it's pretty even right here with this trend line of accumulation. So now the 3 indicators that I use are the RSI, which tells you if it's overbought or oversold. Up here, this area up here is indicating overbought. So when you see it on over that line right there, that's indicating overbought. So all these areas are overbought. Now if it dips below this line, that's oversold. So you can see it didn't go quite oversold there, but it touched it, which still oversold, but it wasn't over that line to where it's like, oh my gosh, it's crashing. But then you have the MACD histogram, which tells you the volume and what direction the volume is going in. So when you have volume going up on the way down, that means the volume is on the selling. When you have it going up on the way up, it's telling you the volume is going green, but it's going higher. And then you have the MACD continuous lines, which is pretty much MACD is moving average convergence divergence. RSI is residual strength index, and the MACD histogram is just the chart of the volume going in whatever direction it is. And so the MACD lines are indicating whenever they cross over, whenever red crosses over black, that's an indication of a breakout. And the thing I like about reading these charts is on the same way that you're reading it going up, because if you look, all these line up. Your MACD histogram and lines crossing over to the upside, chart MACD chart going up, and then RSI started to break out right there, so it's going up. And then you got 510 crossing over the 20, which is a breakout. So right there is indicating breakout, right here is indicating breakout, right here indicating breakout, and right here indicating breakout. All those signs are telling you is, hey, I'm about to break out. And what did it do? It broke out. And just FYI, like I said, I was going to tell you where I purchased. This is where I bought. It was in here. I think it was the 7th or 8th that I bought. It was a Saturday. I don't remember exact date, but I bought right here. And what did it do? I wasn't even reading the charts at the time. That's when I started stacking, and I was like, I'm gonna buy a good chunk and start my stack. And I bought, and blessed, I caught that breakout without even reading the charts. And then once I started getting into stacking, I was like, okay, let's start reading charts and let's see where things actually break out and where they're at, and start buying based off the charts. I could add every now and again. Even if I'm up here, I can add a little bit, but doesn't mean I'm gonna freaking buy a huge chunk like I did here at the bottom. And the reason we call this stage 1 accumulation is, look at all this time you had to accumulate. Same thing over here. Look at all this time you had to accumulate. Look at all this time you had to accumulate. You buy every stage 1 accumulation zone, all of a sudden you're sitting on a nice chunk when you're breaking out at these heights. And so all that to say, gold's overpriced right now. RSI is coming down a bit, so that means it's starting to get sold off, which is good, because that means it's going to start coming down. I shouldn't be using all these circles because it's probably confusing you guys, but it's going to start coming down Same thing with the MACD chart. It's starting to build its way down. Look at that. And then once these, and like I said, the reason I like reading the charts is you could tell this on the same way coming down. So look, when black crosses over the red, coming down. When momentum starts to shift to the downside, coming down. And when the 510 cross over the 20, right there, coming down. And what did it do? Came down. Same thing with RSI. When it went from oversold to starting to sell off, now you got RSI selling off, 510 crossing over the 20, and your MACD is volume is going to the downside, and your lines are crossing over. And what did it do? Sold off, sold off, sold off, sold off. So this works going up the same way that it does. It works the way going up, same way it does coming down. And so let's clear all this off. And so that's why I'm not purchasing any gold right now at the moment, because there we go. And you could, like I said, you could do it on any time frame. You could do this on 4 hour, you could do this on the minute chart, you could do this on, 10-year chart, you could do this on whatever time frame you want. But just to make things easier to explain to you guys, so you got stage 1 accumulation. Oh, need to edit. You got stage 1 accumulation. Here's a prime example, but you can see it anywhere. So stage 1 accumulation right here. Okay, 510 crossover 20, stage 2 breakout. And it broke out for a while over here, from November to where we're at now is when it broke out. Like I said, you could do this on a smaller time frame. This makes it simpler, more simple. Stage 3 accumulation, stage 4 decline. See that? Stage 1. Same thing right here. Stage 1, stage 2, stage 3, stage 4. Boom. All day long. Stage 1, stage 2, stage 3, stage 4. It's over and over and over. You can see it anywhere. You look at charts long enough, you point them out all day long. Oh. Oh. All day long. This is how charts go. So anybody that doesn't read charts, it's this simple. So all day long. Stage 1, stage 2, stage 3, stage 4. Stage 1, stage 2, stage 3, stage 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. And right now we're at 1, 2, and we're starting to build out sideways. So we'll go stage 3, and then we'll go stage 4. Now, if you want to get into more technical analysis, there's a possibility that this stage 3 turned into stage 2. So say we're right here, just use this area for example, right? We're on stage 3. Now it's very possible that if it builds sideways for long enough and the RSI doesn't drop, because when things sell off, that's when prices drop. So you build sideways long enough, you can build a new support level, and then it can break out from there. So we didn't have to come down here, but people got greedy, wanted to sell, make some money, whatever, sold off. That's how, like I said, that's how the stages go. But if you build support long enough, you could break out and build a new support base. So let's look at silver now. Same thing. I bought, let's look at this. I bought right here, pretty much same time, because I started stacking gold and silver the same day. Look at, we were on extreme RSI on the downside. Momentum was shifting, and momentum was shifting. So we got RSI breaking out, 510 crossing over the 20. MACD chart is showing volume going to the upside, and they crossed over going to the upside. Now I could have a whole charting class on this, and it would take years to explain it all, the nuances, and for you to master it. But it's definitely something you can start implementing. The 4 stages, call it the money flow, and this is just how you go. This is how you trade when it comes to stock market, when it comes to anything. Stage 1, and stage 1 is 4 days. You want 4 days of price movement sideways. And what do we got? 1, 2, 3, 4. Then you got crossing over, stage 2 breakout, 5, 10 crossing over to 20. That is a breakout right there. And what did we do? We went up. Now we're approaching stage 3 because we got 3 days of sideways movement. And like I said, we could build out right here for, you know, a few days, probably a month or so, and this becomes our new support. And then we could break out from there. And now we got a new support around $25. But look at where resistance is. Support and resistance is right here. Right in this is where your support and resistance are. Or is where your resistance is. Support, it's gonna be right here. Look at how beautifully this matches up. This is support. Where did it go? It went up, came back down, perfectly in support. Sure, you got a little, but when you bounce back inside that box, that's bullish. That's showing that it could go to the upside. That's when you know that you've touched support and you're holding it. And then what do? We broke out, and now we've passed resistance, which is this leg right here. This leg right here is resistance, is the resistance breaker. So we break resistance right here, right? And when we broke that, now you got a new leg up, and we've been moving sideways there. So it's a possibility we could build out for a week, a month, friggin' a year. And then from there, we could shoot up. But it's also a possibility that that's where our new resistance level is. And then we come back down to a previous support, which could be, you know, it could build anywhere. It could be right here because there was sideways moving there. It could be there because there was sideways movement there. You won't be able to tell, and my guess is going to be right around here. We're going to have support of $23.75, $24 for a while. Now if it comes down, possibility, then it would come to here, come somewhere in this zone, because we got a huge support zone right there. This whole chart from last year and this whole area from this year. But it's not out of the question that we build support right in here, because we got a lot of support areas right there, right here, and we had this gap down and we covered that, we filled that gap, and now we're above it. So it's a possibility we hold support right in here for a while, which is fine. Let's just hope those premiums come down, you know what I'm saying? But same thing here. This is why I'm not buying silver at the moment. Once again, when I say I'm not buying, I'm not talking about 0 purchases. I'm talking about I'm not buying huge amounts that would take up my purchasing power, because we're at an extreme. It's very possible we come down from here. Stage 4, stage 1, stage 2, stage 3, stage 4. And then we'd come back in this zone. So it's very possible. So why would you buy right here at the top? And look at how overbought this is right now. That's so overbought. This is our last overbought, pretty much. These little areas. And look at how overbought it is. Which, given all the bank runs and all the, you know, lack of trust in the government, etc., that's why silver and gold are booming, because people aren't trusting the government anymore, and they're throwing their money into something they could hold and actually trust. And so because of that, we're getting all these different supports, all these different breakouts in gold and silver. So you got RSI on the extreme, you got pricing on the extreme. And just a little side note, which I'm not gonna go in depth on this, but the further spread apart these moving averages are, the less likely you are of crossing over. So you want them, once they start to come in tight, like how they are right here, see how they go from spread out over here to coming in tight? That's what you want. See how far spread out these 3 are? The chance of this coming in and starting to turn right away, slim to none. You need an accumulation. You need these prices to start to accumulate and get inside a little zone, and then they'll build sideways and then either break out or break down. Same thing with over here. when these are spread out, you need them to cross over like that. So the farther they spread out, the longer it could go. The farther they spread out, the longer it could go. But you need them to start to come in and diverge so that you can get that opposite movement. So silver's on the breakout, gold's on the breakout, and that's why I'm not purchasing right now, especially considering I just bought 3 different times or 2 different times in this past month and a half, and pretty big purchases. And so I'm not looking to, you know, add too much right now. I'm fine with just the basics as far as what I already have. And when the time comes and these prices start to come down, or maybe they might not, maybe they build sideways for a while, and that's fine. I can adjust to that pricing, but you need to see it move sideways for a good period of time to know that you're building a level of support. Like, look at that. That's a solid level of resistance. If you look at this, it's a solid level of support. So when you drop, you shouldn't drop below this. When you rise, you shouldn't rise above this. The reason we did it is, given all the banking stuff and all the other things taking place, people are going and putting their money in gold and silver, which is fine. But when you're at extremes like this, you don't want to be making any big purchases on gold and silver, because more than likely pricing is going to come down and you don't want to be left, quote unquote, holding the bag. Which, if you're buying for a long term, you could argue that none of this matters. But if you're buying as a way to, you know, supplement your emergency fund, then, and you have to turn around and sell it within a month or so, then you want to follow this. Because if you buy right here and then next month we're down here, then you're freaking, you should look at how much you're losing. Look how much you're losing from 25 plus with premiums 30, really 30 plus, to 21, 22 bucks. You're losing $8 an ounce. Why would you do that to yourself? Read the charts, focus on the charts, stay attached to the charts, and understand what zone we're in, when we're in it, how long we've been in it, and know these like the back of your hand so that you can accumulate and stack at the right times. I appreciate you all. Thank you for tuning in to see, and I really encourage you guys, read the charts and study them so you know when you're purchasing, you have conviction that it is the right time to purchase. Appreciate you all, and keep stacking all the precious things in life. Oh yeah, and happy Resurrection Day. Remember that Jesus died on the cross for our sins and the sin of the world so that we can all have everlasting life in heaven. Don't ever forget that. Appreciate y'all. Love you all. Keep on stacking all the precious things in life. Love you.